We are going to try to do another sectors review. All right. Time has passed. Check out my playlist, market reviews. I did a whole bunch of sector rotation, market reviews, and it's just time. I'm going to do the S&P sectors. Just to get a clear view. Fear gets involved when it goes up into stage 2. There's greed, and you start seeing just dollar signs. Your NAV exploding. You can't do wrong. And then when there's a sell-off, then you're in fear mode. This is the end of the world. Well, just gonna try to redo a recap of what happened in 2008 on the monthly candle chart. I don't think I'm gonna zoom in on the weekly unless there's specific needs for it, and see where we are today and what to expect based on how it broke down previously in 2008. So let's look at the consumer staples, guys. Right now, I put the white lines here, previous high, 2008, and I put the blue line where it broke down in October. You see the dates at the bottom. So that was a high for consumer staples in December, and after that, it broke down in October right here below that breakdown line right there. Right here. Okay, let's check it out here. Now, the high, I have it on January 1st, 2018. And right now, it does have some action below the 12-month moving average. Came back. It's actually closing above. And where do I have my breakdown line? Right here. So this would be my top pattern on the monthly candle chart. So we're not quite there yet, guys. We're not quite there yet. Still a little way to go before we have a full meltdown for that sector. Okay, utilities. December 3, high, breakdown in September. In October, it just compounded. Right here, yeah, in September, you see, it didn't break down like the other ones. It broke down 1 month later, the consumer staples. Utilities broke down 1 month before in September, and October when the staples decided to break down, it just compounded. Had the high in 2007, guys. So that's almost a year before it broke down. Staples almost a year before it broke down. They both had their highs in December. And where we are today for utilities. Whoa. Patrick, zoom. At a high, see that we haven't surpassed the high of November 2017. But look, it's had difficulty going down, but it's still going up, guys. And this would be my top pattern. So these two, utilities and consumer staples, they're back into stage 3 territory, stage 2 territory, but they're not on the verge of breaking down, guys. Maybe they're forming a top pattern right now, but they're not below their 12-month moving average. All right, real estate. Real estate peaked in February 2007, crashed. Sorry, zoom in these crazy candles. Actually, the final crash was in October. So it was already on the downtrend for a while. And after that, it just capitulated when in October, that final candle here, when with all the other stocks, all the other sectors. Wow. Okay, so this has peaked. We haven't surpassed the August 2016 highs. There have been a side move since then. We've been drawing out a support line right here. And right now, where price action is right around the 12-month moving average, just a little bit below. The wick went down, got brought back up. 2007, guys, over a year. Almost a year and a half. Not quite the same pattern, not quite the same exaggerated pattern here, this exponential pattern. So right now, it's just in the stage 3 consolidation. could either break down stage 4 or continue up to the top. We currently no man's land. Financials was in May 2007, had a high and didn't take 2007, and then it started breaking down already in November 2007, and then it was on a downtrend. And when people say, the financial crisis of 2008, well, it had already started a year before it broke down. So it was already in the stage 4 almost a year before it actually, for the rest of the market, before the rest of like the world, the end of the world, everything broke down in 2008. Look at that. So it's kind of weird that people say, financial crisis. Well, it was already in a financial crisis late 2007. So I guess a question of perception. I think when all the sectors, all of them are, when the last one of them decides to join the party in the stage 4, people declare it the end of the world. But before that last one gets into stage 4, remember, all the other ones already have to be in the stage 4, right? They all become stage 4s, break down at the same time. So there's leaders. This was the leader of the stage 4s, and they just started joining until they all joined. So right now we still have 3 that are non-stage 4s. So before we have a full meltdown, I would expect these 3 to I would expect a little bit more line of defense before total breakdown. Financials below, had a wick below the monthly defined breakdown line. Haven't surpassed those highs since December 2017. Wick starting to go back up above that breakdown line. 12-month moving average is flattening. Price action below, but it's still not full meltdown yet, guys. You want to break down below horizontal breakdown line like this. You want 12-month moving average to start going downwards. We're not quite there yet. So for the financials, still stage 3, borderline stage 4. Okay, couldn't get. Oh my God, I need more milk and turmeric if I could tolerate it. Okay, I don't have anything for it. Communication services changed, I think, a little while back. So I don't have the 2008 data, except that I noted that it peaked in May 2007 and started crashing, broke down in early in January 2008. And this is kind of erratic. So actually, this has been in stage 4 for a while. Very erratic. And I trying even here stage 1, guys. And price action trying to stay above the stage 1. October's not over yet. Above the 12-month moving average. And definitely just stage 1, guys, for communication services. This has actually broken down at time to cycle while the other ones continued. This is already has fully cycled its bear market, communication services. And then we'll figure out if this stage 1 is going to be a stage 4 continuation down, or is it going to stay in stage 1 and then revert. So we're kind of having a cycle within a cycle for communication services. Those highs from 2016, not even close of getting challenged. Lower lows. Definite downtrend there. Information technology, guys. Highs October 2007, broke down in September 2008. It broke down a month before everything broke down. Nice top pattern, was already in the stage 3. It was in the long, prolonged stage 4. Just didn't manage to get back up to beat those previous highs. And after that, we had this crazy stage 2, guys. And it's still in the stage 2. The 12-month moving average, we're above it. Sure, there's a down candle, but I have to move the highs. We beat those highs, I think, right here. Those are that. So we reset the highest highs really close by, still angling upward the 12-month moving average, still not below that breakdown line right here. So information technology, embryonic breakdown would be at this level right here. It's still part of the, so now we have 1, 2, 3 sectors that are not in stage 4. even financials, stage 3. Telecommunications has almost completed stage 4, stage 1, maybe continuing down, we don't know yet. That sector, information technology, is still going upwards. So we're getting a feel of the sectors within the SPX of where we're at. Industrial sectors, guys. Oh, crooked line. How did it happen here? Back in 2008, 2007, reach a high, top formation, price action below 12-month moving average. Going down, trying to test it, failed. Going back down, tried to test it, the 12-month moving average failed, and then actually broke down way before. In June 2008, the industrials actually failed before the full meltdown, a few months before the full meltdown. So before we had the full meltdown, here, we need this to fail. And right now it's below the 12-month moving average. Etching towards that breakdown line right here at almost 600. Definite stage 3. Stage 2 has ended. And the more the price action stays below that 12-month average, the more we're going to say, okay, this is it's starting to break down. So we're not quite there yet. Might need a few more months. It's going to be hard for all these sectors to break down in this month, to have confirmation that we're in a full bear market, that we have a full meltdown yet. We're not quite there yet. Oh, materials. High. So this one was one of the last ones to break down. It really broke down with all the other ones real fast in September. Had a peak. It peaked right a few months in May. This time around, this has peaked in January 2018, and now it's breaking down right now. If we close below that 12-month moving average, we have that implied measure move. We have a downtrend. And yeah, that's going to bring us all the way back to this previous base, resistance turn support around these areas here. And that's all. That went so down fast, already almost close to that target, guys. So we might have a pullback, test that 12-month moving average. It's going to start going downwards. Oh. Might go up here once it reaches target. Test that resistance, that support turn resistance, and go back down. So the time that this price action happens, we're going to have more candles that are going to be added to these other sectors. And if we're really due for a market crash, I would expect these sectors in the following months to start going down and testing their breakdown lines. Not overcoming those previous highs. Going to test their breakdown lines. Here. Same thing here. Test down the breakdown lines. This one's already testing it. This one actually might break down and then test 12-month moving average and then break down again at the same time. I don't know what to do with this one, guys. It's messy. Maybe test a breakdown line right here. Information technology. Sure. Go back down here. Industrials. Same thing here. 12-month moving average down. Testing that breakdown line. Hitting the 12-month moving average. Then going down. To join the materials. So if the materials is the first sector that's really broken down, bear-wise, market crash-wise, then before you have a full-fledged run to the hills 2008 scenario, you have all the other sectors that have to start behaving a certain way to coincide and to get dragged down at the same time, decompose, construct that top formation, break down from it. What about energy sector? Ooh, so now stage 2, consolidation right here, but breaking down below the 12-month moving average, so going back into a stage 2, stage 3, then that continues to a stage 2, and now breaking down to a stage 4. here's my top formation. I don't know how this is gonna handle. If it has to break down with all the other ones like it did back, they all broke down in 2008. That's what everybody got dragged down. It had a peak in 2000 May, and in September, one of the first ones to break down, guys. And right now, the first one to break down is it's materials. It's the only one for now. So not quite the same scenario. And this, if this decides to go down, you need price action. Go back here, 12-month moving average, and then go down. Discretionary, guys. How did that behave in 2008? It peaked actually in May 2007. Broke down, one of the early ones broke down in February, just like real estate broke down a whole while before the actual breakdown, already in the downtrend, and then joined the party. Crazy wick down. And by the time it joined the party, it was already more than halfway towards its base. And after that, it was already a leading sector. So remember, the leading sectors right now that are going down could be the leading sectors that are going to go up. So the other ones are going to start joining. Then somebody's going to say, oh, market crash. But by that time, materials probably going to they'll be closer to the bottom than the other ones. And they'll be the leaders starting to turn back up, guys. So it's like when they all break at the same time, just call, market crash, but they're not. Some have been already in the downtrend for a while. And after that, when it starts bouncing back up, some of the sectors are already going to be healthier than others. There'll be leading stocks. There'll be leading sectors going back. So if this one's going to have this, see, this one resetted the peak right here. So I have to move it. That's a high. So that's just a recent high. And if this would to break down at the same time as materials, you need that 12-month moving average to start going downwards. Test that breakdown line, test the 12-month average, and then down. So I think we're many months away from a full market breakdown. This is probably, well, look at that, healthcare, same thing, still an uptrend. I have no idea if this is going to go, after the high, yeah, we just reached a high here. So for this to break down with the other ones, it'd have to continue really strong here. Like that, and then test that. So these are monthly candles, guys. We need a lot of months. So we have right now just one that's really broken down. We could be easily 12 months, 10 months away from a full breakdown. We need a lot of candles to be added. Taking a step back, looking at the monthly candle chart, trying to see a clearer picture, and I just don't see it right now that we're in a crash mode. Maybe in 1 year, maybe in 10 months. We're just not there yet. But it's definitely not we're not at stage 2 territory. We're more in consolidation, top stage 3 distribution, and eventually stage 4. But just keep monitoring how it behaves in the top zone. And then maybe we'll get a crash in next year, late summer, guys. All right? That's a long one, guys, but it was worth it. Subscribe if you enjoy it, guys. I love you. Ciao.